Are you thinking of buying a home and unsure if you should get a mortgage approval first? Well, sadly, I can tell you that having a heart of gold and $1 million smile doesn't mean anything to the banks. So in this video, I'm going to explain the benefits of getting pre-approved before you go home shopping and some of the steps you'll take when going through the mortgage approval process. And we are starting right now. Hi there, my name is Patrick Fields and I'm a realtor here in Edmonton, Alberta with RE/MAX Select and EdmontonHomeInfo.com. If this is your first time on my channel, please consider hitting that subscribe button. I post new videos every week on buying tips, selling tips, community tips, and just things about Edmonton in general. Okay, so let's get into it. So why get a mortgage pre-approval before you start home shopping? Well, you need to know how much you'll be approved for in order to know what kind of home you'll get into. Once you have a budget to work with, your realtor will be able to show you what types of homes are currently for sale in your price range. Now, whether that's a house, condominium, or townhome, in the size you're looking for, and in the areas you want to be in. There's absolutely nothing worse than finding a home that you love, making an offer on it, only to find out that you don't qualify for a mortgage that high. What's even worse is if you were so confident that you'd be pre-approved that you paid $500 or $600 for a home inspection only to discover that you didn't qualify. So here's a tip. My clients always complete our home inspection after our financing is approved, even with a full pre-approval. I don't want any surprises, just like we do a home inspection after we review condo documents if you're buying a condominium. So where do you start? Well, if you have a great relationship with your bank, you can go there. But here's my 2 cents. And these are facts. A bank employee only knows that bank's policies and can only offer you rates available through the bank. A mortgage broker has access to dozens of different lenders, charter banks, private lenders, and they're going to find you the best mortgage product, like rate, term, prepayment, privileges, etc. They're there to help guide you make the best choice for you based on what your priorities are. Because choosing the wrong mortgage can cost you thousands of dollars. Mortgage brokers do have access to some better interest rates from some lenders on what they call a quick close file. And that's one where you remove your conditions and take possession within about 30 days. Now, it's not something that happens all the time, but you might qualify and it could save you even more money. Also, mortgage brokers only get paid once you take possession of your home. So they answer their phones, can text you back evenings and weekends, whereas bank employees usually work normal banking hours. Now, if you're not sure who to call, just send me a message. I'll be happy to send you the names of some great mortgage brokers that I've dealt with. So one of the first things that either the bank or the mortgage broker is going to do is take a look at your credit score. And this is so important. This tells them if you have a history of borrowing money and whether you pay it back on time or not. If you've ever fallen behind on some payments or you just want to see your credit score, you can actually order a free copy of your credit report from Alberta CANADA. And this is a good idea, as you might have some credit cards you forgot about or somebody decided to steal your identity. So again, it's free and it's a great idea. I'm going to put a link to their website in the notes below. So then the mortgage broker will take a look at your income, expenses, down payment, and they're going to determine how much a lender will be willing to loan you. And this is where they will talk about GDS and TDS, which stand for gross debt servicing and total debt servicing ratios. Those numbers have to be within certain standards that the bank is going to make sure that you're going to be able to pay the money back. They look at any existing payments that you have, like car payments, school loans, credit card balances, and then they add in your new mortgage amount, property taxes, a percentage for utilities, and condo fee in the case of a condo. Mortgage rules in Canada changed just a few years ago, and it used to be that the loan you qualified for was based on the interest rate you were going to receive. But now they actually have to use the posted Bank of Canada rate to figure out your maximum loan value. And this has really reduced people's mortgage amounts, or even if a person qualifies for a mortgage. They're going to take a look at where your down payment is coming from. If it's from a family member, then they're going to need a gift letter signed by the family member saying that the money doesn't have to be paid back. If you've ever been separated or divorced, The lender's going to want to see a copy of the separation agreement to show whether you are paying or receiving money for child support. Being self-employed versus having permanent employment makes a difference as well. If you're self-employed, the lender will want to see a 2-year average of your income from your income tax statements in order for them to assess how much they will lend you. There is a lot of paperwork that they need in order to give you a real pre-approval. This isn't a pre-qualification. It's not where you pick up some app or phone somebody and say, hey, I make X amount of money and I want to buy a home for X. Do I qualify? That doesn't count because they really need to see employment letters, pay stubs, 3 months of bank statements, T4s, notice of assessments, RSP, and investment statements. So please make sure that you understand the difference between a pre-approval and a pre-qualification. Another benefit of getting pre-approved is that it locks in your interest rate, and usually up to 90 days. If rates go up, you get to keep your interest rate, and if rates go down, they're actually going to lock you in at the new lower rate. So it's a total win-win. So, I mean, really, unless you have enough cash to buy your new home outright, hopefully you've learned why it is so important to get pre-approved before you start home shopping. This is the largest financial investment that people make. So make sure you have a qualified team to assist you every step of the way. And if you have any questions or comments, please leave them below. If you have a real estate question that you'd like answered, just call or text me. I'm happy to help. I hope you have a fantastic day. Until next time.